Home prices have been holding steady with a 1 to 3% increase over the past year. This stability offers a solid foundation for the future investment plans. Depending on where you live, the average cost of living has increased over the last few years, but many people have come to realize that buying a home now is cheaper than renting. When renting, you are essentially paying someone else's mortgage and allowing them to grow their investment plans instead of you. With renting, you are subject to your landlord having the opportunity to increase the cost of the rent annually.
Instead, when you own your own home, you have the peace of mind that your housing costs would have stability. With a fixed rate mortgage, your monthly payment will remain consistent. This stability allows you to have better long-term financial planning.
Over the last few years, we have seen rates down to the 2% range and increase again to the 8% range. When rates increase, we tend to see purchasing decrease, but that is not always the best option for buyers. Just because the rates are higher does not mean it is a bad time to buy. If you look at homes today compared to a year ago, they are tending to stay on the market longer. Within the last 6 months, homes are spending on average 50 days on the market. This means extended availability opens more opportunity for negotiation and flexibility.
You have the chance to use the current characteristics of the market to your advantage. Rates are higher, homes are staying on the market longer, people are second-guessing buying. All these factors play into you and your realtor being able to negotiate the perfect deal for you. Sellers are looking for what they can do to sweeten the deal. This is where seller credits come into play.
Seller credits are essentially a credit from the seller to the buyer. As the buyer, you can use these funds to help with covering closing costs or even buying your rate down with discount points. We mentioned high interest rates are one of the factors playing into the current market. Don't let this be a factor that steers you away from buying your dream home. There are different loan programs out there, and one of those is right for you. Just because you buy now with the higher interest rate does not mean you are stuck with that rate forever.
Refinancing is always an option in the future after making your first 7 payments. If you let the higher rates intimidate you, then you might pass up on what could be your dream home. Take advantage of what is happening now. A seller won't constantly change the price of the home, but you can always change your rate later when you're eligible for a refinance. One way to put it, date the rate, marry the house.